I am biased. I mean, my whole life has been around honest money and the miners, but if you can't mine, can't grow it, you got to mine it. And all these green people, which I have nothing against their philosophy, but even a plastic bicycle uses oil. I mean, if so much depends on mining, especially in a modern technology society, that people just overlook and take for granted. They don't realize that without mining, we wouldn't be where we're at.
And am I correct in saying that there's been underinvestment in the mining sector over the last couple of decades?
Yes, Tavi Costa did a chart recently, put on LinkedIn, and it shows probably the lowest investment versus the commodity sector versus the stock market, particularly, and the gold to gold miner index also. So it's screaming by, it's when it's overlooked and unloved and hated and no one thinks about it. I mean, those are the times to buy when no one else wants to. And that's right now.
Um, and I assume that the mining companies over the last number of years have been hit with the same inflationary pressures that all other industries have, probably disproportionately so as well. Uh, what level do you think, or do you understand that silver miners are actually producing silver at?
Yeah, I mean, my friend Steve St. Angelo does a different cost analysis on the all-in sustaining cost, and I've kind of adopted that to my thinking. And what you really got to do is look at the balance sheet and see if they're in profit or loss. And really, if you look at that, I mean, the true all-in sustaining cost for most primary silver producers is like 28.
Hmm.
So if you got a margin of 30, that's really not very much at all, especially if you've got to replenish your asset. You got to go find another ore body or buy out another miner or whatever if you want to stay in business. All mines end in failure. The richest mine in the world gets, ends in failure because you take out that last, 10 ounces of gold and now it's all gone. So now you're out of business. So it's a very tough business, and it's really, the margins are not where they need to be. Uh, Even
See,
at $30 silver, you
so you're
really
talking,
need a lot higher price than that.
yeah, so you're talking kind of that all-in sustaining cost of $28. So if you're $30, the silver company's making, got a $2 margin, which is, it's small. It's 6, 7%, something like that. So you
It's not
probably,
much. And then if, yeah, sorry to interrupt you. I
yeah.
mean, if the oil price goes up, $10, all of a sudden that you're at zero again.
Mm.
I mean, it's a tough business. It's energy intensive, and there's political stuff, and then you've got noises about, changing the guard in Mexico, and are they going to, they're already talking about curtailing new mining activities and perhaps no open pit. All this is hot air as far as I'm concerned at this point, but nonetheless, it's in the conversation politically. So, and I mean, I am biased. I mean, my whole life has been around honest money and the miners, but if you can't grow it, you got to mine it. And all these green people, which I have nothing against their philosophy, but even a plastic bicycle uses oil. I mean, if so much depends on mining, especially in a modern technology society, that people just overlook and take for granted. They don't realize that without mining, we wouldn't be where we're at.
So it would be logical then to say that if the price of an ounce of silver outpaces the inflation rate, that miners is a good place to go because that margin should be increasing. But if it doesn't, we're going to see those miners squeeze and stay underperforming going forward. Is that a fair analysis?
Yeah, I'd say it's slightly different, but you made the point. As long as the miners are selling near the cost of production, they're probably not a very good investment. Once the silver price takes off, you get extreme leverage in the mine. So once you get into, for silver, all remaining the same, which it never does, but all things being equal, when silver hits 33 to 35, now you're looking at maybe a $7 margin for most of the major miners in
Mm.
silver. Now you're getting a pretty good margin. And then if it goes to 40, 50, now you're starting to really get some leverage. And of course, what will happen is some of these miners will hedge their gains, which I have no control over, and really prudent business practice say that you probably should. But there's a lot to it. And I do think you're going to see, what happens in all markets. I mean, all markets go from undervalued to fair value to overvalued. And the question we have for silver more than gold, but for both of them, is how overvalued will they get? And the answer is nobody knows. And having said that, they don't necessarily have to be overvalued. I mean, if you look at the base money supply and the amount of gold the Treasury says it has in the United States versus the base money, how many physical pieces of paper have a president's picture on them, and you do the division of the billions and billions of dollars and the amount of gold, it comes out to over $25,000 per ounce. And that's the the fair value.
Mm.
That's accounting for every piece of paper being backed by gold. So to be overvalued, it'd have to be above that number. I'm not sure we're ever going to get there. I really don't. But unfortunately, the possibility does remain if we go into with a high inflationary environment. I don't even like to say the word hyperinflationary environment in the United States, where the US dollar is perceived to be in a destruction mode, where people just don't trust it at all and buy anything and everything they can with the dollars they own because they know they're going to become almost worthless.
Mm.
Then you can't put a paper price on it. Is that going to happen? I doubt it. I really see a reset happening before that, changing of the guard, um, a reneging on the debt, a restructuring of the debt. I'm not sure what it looks like. I mean, it's pushed toward the CBDC, and I don't want to take the conversation any further than you want to, but it's very trying times, and this is why just having just a cursory knowledge of those things requires a prudent man or woman to buy some physical precious metal. And
Yeah,
that way, it's not going to solve all your problems.
yeah,
But
but
believe me, if you need it and it's there, and there's a bid asked for gasoline or groceries or the farmer's market or a taxi cab, and people aren't trusting the currency, and you pull out a shiny disc, you'll be first in line.
you make an interesting point there because you talk about a situation where there is hyperinflation, and regularly you'll see on YouTube you'll get people calling for ridiculous numbers for silver. 100, 500,000, a couple of thousand, whatever it is. And people can look at those numbers and say they're very fanciful. But really what they're talking about is in a scenario of that hyperinflation where the value of paper currency, and it's not just the dollar, it could be sterling, it could be euro. We've seen it throughout history, starts to rapidly decrease. So you can get to a situation where 100, 300, 500, or $1,000 silver is um, perfectly feasible, but it might mean that your loaf of bread is $50.
Right.
That's what you're talking about in scenarios like that. And a lot of people don't make that connection. And what you're saying is that's a possibility, but you think that before that happens, that there will be intervention of some sort and there will be a reset. I'm not necessarily talking about the great reset, but there will be a reset, which might be central bank digital coins. But it will be something that will hand control back to the government, because the last thing that they ever want to do is lose control of their currency. Is that
Yeah, I
a
mean,
that a summary?
yeah, they're very good. I mean, I can almost guarantee they'll do wage and price controls. And that happened. You probably don't know. I'm old enough to know. But under the Nixon administration, they put on wage and price controls when inflation was 4%. We're above that now, but they were so worried about that high level of inflation. Wage
Mm.
and price controls. Your wages can't go up. They're locked in for the next, I forget the duration, 2 years, no raises across the board. And prices, you can't raise your prices on these commodities, milk, eggs, bread. I'm making it up, but there were wage and price controls. That's a
Sure.
fact. Exactly what the exact details are, I can't recall, but I can recall. And that was at 4%. So you look at that today, and we're admitting 5% or whatever. Now it's come down to 3 something%, but still, and that's where people get misled because they don't understand money, they don't understand compound interest, they don't understand exponential functions, and they see that the government says inflation 3%, but the grocery bill is 400% greater than it was 4 years ago. I mean, 400% versus 3%, that's a big difference. And that's just for groceries. It's not across the board in every aspect of our lives, but And the two most important, really, food and energy. And this is what people know. They don't know anything about economics, very little, other than their personal economics and what things cost. And when they get that new insurance for their car or for their house or for the medical insurance, and that thing's up 30%, then they start to question this government that tells them that inflation's only at 5%.
Hmm. So what we're looking at, as you're talking there, I was just thinking there was a Netflix series that I'm quite sure that most people watching this will have been aware of, called The Three Body Problem. And where the name of that comes from was how scientists are easily able to calculate the movements of two celestial bodies, the gravitational forces that are affected by that. But when you bring a third celestial body, you have a three-body problem. It becomes exponentially more difficult to calculate how those things behave. So we're talking at the beginning here, our two-body problem is the supply-demand. And when you've got this additional demand coming from the clean energy and the photovoltaic, and the additional demand coming out of China, that alone is, you can clearly understand how that supply demand imbalance is going to squeeze the price of silver higher. You then bring in this third body, or this third question, which is the potential for either whether it's de-dollarization, the collapse of the dollar, hyperinflation, all of these things. You've no idea where that could potentially take the price of silver, but that you can purchase silver and invest in silver because of the investment case, which is very much underpinned by the supply-demand imbalance. But you also get that element of financial insurance because of the way it behaves as a monetary metal in this scenario where you've got hyperinflation, and it protects you from that also. So you've got kind of protection from both the two-body problem and the three-body problem in that scenario, if that makes sense.
No, it does. And, just as a further analogy, I mean, that third body just has to have a slight influence to disrupt things. And that's where I think the education comes in. It's like once that starts and there's a run to gold and a run to silver, it's going to be more than an emotional run than it'll be a logical run. It won't be critical thinking. It's like, I believe that the dollar's doomed. I don't think it's doomed to zero, as I've said earlier. But what is doomed is that the thinking changes. And it's sort of like the flock of birds, when a flock of birds is flying south for the winter and the lead bird takes a huge left turn, they all follow. No one really knows how that takes place, but that's what happens. We've observed it. That's part of nature,
Mm.
and that's part of human nature as well. All of a sudden, we don't know when, and we don't even really have to know why, but we know that all of a sudden, people that were kind of poo-pooing the silver guys or gals, for so long, all of a sudden they join the herd and they have to have it, because if they don't have it, they feel that, you fill in the blank, they won't be able to maintain their wealth, maintain their purchasing power. Their savings are doomed. And, and I don't want to be a doomer or whatever. And that's why I've always tried to advocate, be sensible.
Mm.
You need a certain amount. 10% is probably a good rule of thumb for almost everybody. But the studies show actually more than that. The Ibbotson study says 15%. Jeff Christian's CPM group shows 25% from 1968 on. But regardless, that awareness, I think, will shift. And that's a lot. That whole flock of birds as a metaphor means that all these people that were conventional real estate investors all of a sudden cancel their real estate, their portfolios down, 30%. They're going to have to sit on it. Maybe they have to sell something at a big discount just to maintain what they already have to make the payments or whatever. There'll be a big shift. And I think it's starting. I think it's starting in China, and I think it will accelerate. We know it started. I mean, I've been saying the run to gold has started, and I'm standing hard on those words, because the central bank's buying has been extreme the last couple of years. And it's always the smart money that's in first in kind of a stealth manner that no one's paying attention to, that starts the next run to gold. But it starts off as a real lazy walk, and then it's a normal walk, and then it's a brisk walk, and then it becomes a light jog, and then a full jog, and then a fast jog. and then it's a run, and then it becomes an all-out sprint. And that all-out sprints when those birds all flock together and say, "Oh my God, if I don't have some metal, if I don't get gold, I'm doomed." I mean, I know I'm sounding extreme. I'm just trying to explain how markets work. I mean, I've been a student of the markets my whole life. And there's so much psychology to the markets that people don't understand. They think it's logic based. It's not. It's emotional based.
Tell us a bit more about the Morgan report. Where can we find some more on that?
Yeah, more. The best place to go is our main landing page, themorganreport.com. Get on our free newsletter, or there's a paid service. And then I just want to kick in. I'm working on this documentary about overcoming the fear, stress, and control of money. And that's at my landing page, silversunrise.tv. We just interviewed another notable that wrote Web of Debt, and she's well known in the banking community. Ellen Brown. We just finished our interview with her, so we'll have some new trailers up on the website, silversunrise.tv.
Fantastic. What I'm going to do is I'm going to put those links in the show notes and the description below this video. And anybody that wants to, highly recommend that you click on those and follow David's stuff. It's truly excellent. But for now, David Morgan, thanks for joining us on the channel again.
Well, thank you, Dave. It's been a pleasure. Appreciate it.